the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're listening to Money FM 89.3, and it's now time for Market View with me, Chua Tian Tian, where we take a quick look at how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of how we started. Well, Singapore shares actually started in the red today, tracking overnight losses in US markets. So if we look at the Straits Times Index, it opened 0.2% lower at 3,793 points after 17.4 million securities changed hands in the broader market. But as we told you earlier, the STI closed in the green. So let's take you through the closing numbers. So the STI was up 0.25% at the end of the trading day at 3,810 points. In terms of value turnover, we are looking at 1.09 billion Sing dollars. Gainers outnumbered losers 271 versus 183. Top advances for today, we've got here GMH USD, Venture Core and iFast. And top decliners for today, we've got here ASUS, Southern Packaging and Yangzijiang Shipbuilding Sing dollars. In terms of companies to watch, we have for you City Developments Limited, or CDL, because CDL achieved total divestments of more than 600 million Sing dollars last year as part of its capital recycling initiative. Now, elsewhere from Asian markets' reaction to China's 2024 economic growth numbers, to how Nvidia CEO Jensen Huang is set to miss the inauguration of U.S. presidential-elect Donald Trump on Monday. We've got more international and corporate headlines in focus. And joining me on the Friday is Sunny Soh, Lead Technical Analyst, Capital Markets and Investor Education at SIAS. Sunny, welcome.
Hi, Tian Tian. Thanks for having me back on the show today.
Great to have you on. And Sunny, let's start with the Singapore stock market as usual. How did the STI fare today? Any surprises when it comes down to the counters to watch, say, CDL, given its total divestments of over 600 million Sing dollars in 2024?
Yes, I'm seeing the same color as you saw earlier. I'm seeing green on the STI Index. Yes, we are up about 9 points or 0.25% to close at 3,810 points. And for the week, we are up about 0.2% as well. So this was despite a pullback overnight in the U.S. market where the major U.S. averages gave up gains from earlier in the day, with the S&P 500 slipping to end at a 3-day winning streak as big tech stocks starts to pull back. So on the big movers on STI, I see Sembcorp, SIA, Jardine Matheson holding up between 1.07% to 1.26%. And on City Development, as you mentioned, their total divestment of more than 600 million includes the Ransom Wharf site in London and the freehold 8-story industrial building, Sideco Industrial Complex in Singapore. So this total actually fell short of the company 1 billion target indicated in early 2024 last year, before the volume of deals across most market and asset classes starts to cool off. So the asset divestment do reflect City Development focus on accelerating their capital recycling initiative, but it also shows market conditions have made the divestment more challenging. There will also be several more divestments in the pipeline as part of its capital recycling program, as the company aims to optimize their capital management while calibrating their portfolio to ensure alignment with their strategic objectives to maximize shareholder value. Market seems to be taking this as a positive sign, as CityDev shares are up about 5 cents or 0.99% today to finish at $5.10.
I see. And Sunny, from CDL, let's take a look at Mapletree Logistics Trust. Some divestments there as well. Its trustee, the HSBC Institutional Trust Services, entered into a purchase agreement to divest the property at 8 Tuas View Square for around 11.2 million Sing dollars. That is close to 40% above its latest valuation. So how would you read into the latest development? How significant is this for the trust given at the counter's unit price movements today?
Yes, close to 40% above its latest valuation. That seems like a very good price at 11.2 million Sing dollars.
Yeah.
So this proposed divestment is actually in line with the manager's effort to rejuvenate its portfolio through selective divestment of assets that are no longer aligned with MLT strategy. So these divestment proceeds will enable MLT to pursue other investment opportunities that are of higher growth potential. As MLT shares has been on a downtrend since September of last year, due to renewed inflation concerns and interest rates staying elevated for even longer, this divestment is actually much needed. The selling price of 11.18 million, especially at close to 40% above its latest valuation, could also help to improve market sentiments towards the MLT unit price. But the divestment is expected to be completed by the first half of 2025/2026, and it's not expected to have any material impact on MLT net asset value or net property income for the financial year. But looking at MLT price performance today, I think unit holders are optimistic about this, as the MLT share price reached a high of $1.29 today. But towards the later part of the day, it gave up some of those gains and closed flat at $1.27.
Okay, and Sunny, let's stay in Singapore. Singapore's non-oil domestic exports on NODX numbers in focus. If we go by December's numbers, NODX grew 9% year-on-year. Both electronics and non-electronics shipments increased, and the showing compared against that 7.8% yearly growth expected by private sector economists. How would you assess the latest numbers? And the question that we always ask on the show is, how sustainable are the numbers looking into 2025 then?
Yes, so this is showing that Singapore economy is doing very well, and this December numbers paint a very positive picture for our country export sector, exceeding expectation and signaling that continued growth momentum could be sustained. So the 9% year-on-year increase driven by both the electronics and non-electronics shipment, right, demonstrate a broader base recovery in the economy beyond just the tech sector. This outperformance against the 7.8% forecast by economists indicate a stronger than anticipated demand for Singapore export. So the fact that both electronic and non-electronic sectors are contributing to the growth suggests a more resilient export landscape that we are looking at, and of course a further broad-based growth as well, and less reliant on any single industry. The rebound in export to the US, which grew 30.7%, reversing the previous month of 19.4% contraction in November, may also indicate a potential shift in global trade patterns that is favoring Singapore export. So overall, I think this is a very positive sign for Singapore economy, but there are still some risk and uncertainty on the horizon as the new Donald Trump administration will take office next week. So it's unclear what new policies the new U.S. administration may have, and hopefully we don't go into a global tariff war that will slow down global economic growth that will impact Singapore and cause further supply chain disruption.
Okay, now if you're just tuning in, we're now in conversation with Sunny Soh, Lead Technical Analyst, Capital Markets and Investor Education at SIAS. While across the region, Sunny, all eyes are on China because data from China's National Bureau of Statistics showed that the Chinese economy grew 5% for the full year 2024, which sort of meets the government's annual growth target of around 5%. That is also higher than the 4.9% growth forecast by economists in an AFP survey. So, if we look at the numbers and also the amount of stimulus that the government doled out and the outlook ahead when it comes to US-China, how would you read into the numbers? Are the numbers healthy enough even though it's 5%?
Yes, so the headline seems very healthy and very positive. Yeah. But if you look deeper into the numbers, China GDP, which today shows the Q4 numbers grow by 5.4% year-on-year, beating market forecasts and meeting the government targets of 5% for 2024. But the growth was actually quite unbalanced, led only by the industry side and exports, raising concern that structural problems may still persist or even deepen further this year in 2025. So China December's data showed that industrial output far outpacing retail sales, and unemployment rate also ticked up further higher, highlighting the supply side strength of an economy running a $1 trillion trade surplus. But it also showed it getting weighed down by domestic weakness. The export-led growth is partly underpinned by factory gate deflation, which makes Chinese goods more competitive on the global market, but also exposed China to greater conflicts as trade gaps between rival countries widen, just like some of the EV tax that some of the other countries are imposing on China's EV. So within China, falling prices have also reaped into corporate profits and, of course, worker incomes, causing higher unemployment. So the data release may be different from what the locals may have been feeling, and if bulk of the stimulus that Beijing has lined up for this year keep flowing towards industrial upgrades and infrastructure rather than household, it could exacerbate overcapacity in factories, further weaken consumption, and increase deflationary pressures. So adding to a possible hostile environment once Donald Trump takes office next week, things may turn south further if if China is not able to deal with this correctly. So while China has achieved its GDP growth for 2024, the Chinese economy still faces significant challenges going forward. Reliance on stimulus measures, uncertainty in trade flow, and potential vulnerabilities in key sectors like the property sector will require careful monitoring from investors going forward into 2025.
And a quick follow-up, right, Sunny? We talked about exports and etc., but how far was the 5% number boosted by an uptick in exports out of China before that Trump proposed tariffs, so to speak, kick in?
How much does that cost? I think that is a difficult number to ascertain now, but I think some of it might be front-running because it's anticipated that Trump might be likely going to roll out some tariffs, especially towards China. So that those stimulus that were rolled out earlier might have already been just put beforehand of this tariff. So that could also help Chinese economy perform and meet the 5% target this year as well.
Okay. And with that 5% figure out, Sunny, how did Asian markets react to that latest GDP print? Because Hong Kong and Shanghai fluctuated but ended in the green. So which are the sectors seeing the biggest moves and why as well?
I think, yes, Asian market actually fluctuated or was a bit mixed today. The Hang Seng Index was up at 61 points or 0.31% today to end at 19,584 points, marking its fourth session of gains amid the upbeat economic data that we saw from China. But locally, they also saw figures from their tourism board, Hong Kong Tourism Board, that showed tourist arrival in the city surged 31% to near to 45 million in 2024, with China contributing the most, of course. But I believe on the upbeat economic news from China, the good news on the local Hong Kong Tourism Board data, this news were still kept by some of the caution that is investors likely see ahead next week, because next week we have the monthly fixing for some of the key lending rates in China, which is an important figure. This goes for the Shanghai Composite as well. That's why the gains were kept. But even though we had good news from China GDP, market is always forward-looking and already have an eye on this key lending rate next week, as well as probably looking at the complexity or complication once Donald Trump takes office next week as well.
And before we let you go, Sunny, I've got about 2 minutes, so I do want to take some time for this one. Nvidia's CEO Jensen Huang, he is expected to miss the inauguration of U.S. President-elect Donald Trump next Monday, which bucks a trend among those high-profile U.S. tech leaders, because for one thing, Elon Musk will be there, Tim Cook is expected to be there, Amazon's Jeff Bezos is expected to be there as well. So how far are you surprised about him not attending, and what signals does this send to investors of Nvidia?
Yes, I think Jensen Huang is the only person that can turn down a president-elect invitation. So yes, it is a bit of a surprise for me, considering the fact that the presence of the other prominent tech leaders, but it's difficult to say what this signals to investors, or if it even intentional on the side of Jensen Huang. So firstly, he's an Asian just like you and me, and during this period close to the Lunar New Year, Huang is visiting Asia, and just like any Asian corporate executive, during this period, we do visit our business partner, catching up with each other, giving bakwas and hampers to each other. This could signal that his focus is always on the business and always prioritizing business matters first. It could also signal his political neutrality. So it may be a calculated move given the highly polarized political climate in U.S., where we saw in the U.S. election last year. And of course, the U.S.-China tension. He doesn't want to take any side, so he rather excuse himself. So maybe he doesn't want to take side and doesn't want to get involved. And lastly, it could also be a sign that maybe he's unhappy, as Nvidia is currently facing a barrage of new rules and regulations in the final days of a Biden administration. So these measures includes tightening to tighten the access of advanced technology such as Nvidia's latest AI chips to keep them out of China's hands. So with all this complication, I think maybe this could be a wise move by him to just excuse himself. But I think investors should not read too much into this and should really focus on the upcoming Nvidia result that's coming up in February.
Just a curious question, because Sunny, I think we're looking at some reports that he will not be attending. He'll likely miss the inauguration. But earlier this month in January, I believe Huang said he was still waiting for an invite to Mar-a-Lago, which is Trump's favorite place for that dinner. Was he invited to the inauguration to begin with, though? Do we have any answers at this point?
I don't think we have any answers, whether the invite was sent or was not sent. I think only Mr. Jensen Huang himself will know. And of course, I don't think he's a person as a great business person. I don't think he will take it personally that he wasn't invited to Mar-a-Lago for dinner by President Donald Trump earlier, where we saw Elon Musk and the other big tech leaders attending. So I think investors shouldn't read too much into this. I don't think Jensen Huang will take it personally at any point of time. I think as a great business person, he is always prioritizing business first. Hence, as an Asian during this period of time, even you and I, we used to visit our colleagues, ex-colleagues, to give them New Year wishes and, of course, eat bak kwa together. So investors shouldn't read too much into this and focus on the Nvidia results that's coming up next month.
Okay, let's focus on the results. And in the meantime, we shall also wait for more ang paos from our bosses as well. And Janice, I'm sure employees of Nvidia are waiting for that too. Thanks a lot, Sunny. That was Sunny Soh, Lead Technical Analyst, Capital Markets and Investor Education at SIAS. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.